Good afternoon, traders. It's Cousin Vinny coming to you on November the 17th, Sunday, from theclosingprint.com and daytraderbootcamp.com. Looking at the indicators on the S&P 500, which is what I use to time the market, we can see that we hit a high on Friday of 1798.22, and we continue to see this upward thrust in this wedge pattern that no longer is constrained by these highs that we saw when we broke above this level recently. So the indicators themselves are showing bearishness in terms of the move higher on bullish percent. NYSE looks like it's about to cross. NYMO is back above 0. ACT gave us a cross last week, so that's bullish. ADX formed a trough and is moving back up, which is showing strength. And the number of stocks trading above their 50-period moving average are at 82.8%, with VIX down in the very low levels, 12.19, and traded as low, I think, as 11.99 last week. Looking at some targets, I took this lower pivot here at 1546.47. It's off a little bit here, and these highs at 1798.22, and I came up with some percent pullbacks off of that level using the Fibonacci levels, which also, the 50% also lines up with this Kirby support shelf. Now we could very well continue to move higher if the breadth continues to move as well. So let's take a look at breadth on the 1500 S&P stocks, and we can see this is the wedge that we were talking about, the break above this level in October, and we could see the advances minus declines. The net result of that figure is moving higher and broke above that high in late October, so that looks good. And the volume percent of stocks moving higher is also confirming that move. So this was pointed out by Arthur Hill over at stockcharts.com, and as well as Ukarowitz on his blog post on Friday, that breadth is continuing to move higher. So that's confirming this move. If we look at the weekly chart, however, one of the things that many people are pointing out is the number of weeks higher. We are 6 weeks higher after this hammer. We saw 6 weeks consecutively, and the statistic possibility of a 7th week higher starts to get smaller. It's not saying we can't, because we can see advanced declines are moving higher on the weekly as well. But if you look back at the number of weeks where we moved higher before we had a pullback, you can do the counts yourself. You can pause this and look at this chart, but for the most part, the most we have are 6 weeks without at least one down week interjected between them. So cumulatively, 6 weeks in a row, the odds are getting slimmer that we continue to push higher. It's more likely that we're going to see a move lower. So just be prepared. I was all cash last week, and namely because the indicators were all turned red, and I said last week that the only way I could get bullish would be if the indicators completely turned around and started moving higher. Well, some of them did. So that's why I was out last week. I was just keeping an eye on researching some stocks and keeping an eye on my 401k and doing some year-end calculations anyway. Looking at the S&P 500 from the yearly low back here in November at 1343.35 up to this recent high, that gives you a 33.861% gain if you just bought and hold during that time period. Now, I mentioned in a tweet recently that I've been watching the results if you timed your entries with NYSE, NIMO, MACD, among other indicators that I use, which could have netted you a 50% increase using the highs and lows and gaining your entry on a bounce and then holding to the next high when you get a crossover to the downside. You would have gained 50% or better depending on your entry and exit rather than 33%. I was more concerned about keeping the gains that I had made on this move higher rather than, because we were moving sideways, I thought we could drop down to the slower trend line. Didn't happen. We ran up. We had 3 white soldiers. So we'll see what happens this week. But with 6 weeks gains, I'm looking for more of a pullback before I take my next entry, at least on my 401k and IRA funds. I've been scalping on other trades, which we'll cover in a minute, and short swings during the week. This is a chart of the Russell 2000 small caps, and these calculations here cover what I just mentioned, which was if you had taken the low in November of last year, 763.55, and you had bought at that point, were good enough to get in at the very low, and you rode this all the way up to the recent high on the Russell, your cumulative gain would have been 47.11%. However, if you had timed your entries using a timing mechanism like MACD, slow stochastics, you can see the entry points here, %B, which I believe Hugh Carwitz uses, and Williams %, these are basically all oscillators, you could have gained 71.99%. So for every $10,000, you would have made $47,000 buying and holding versus $71,000 or $72,000 using a timing for your entry and exit. So that's why I got out last week on the S&P funds, and I exited Russell a couple of weeks ago on this high. So using the same methodology, we can see where the comp is. We bounced off the 382 level here and the 30-period moving average. We see bullish % got really had a nice move lower down to 67. It's turning back up. NIMO has crossed back above 0 after breaking a downtrend. NASI, the McClellan oscillator for the Nasdaq, looks like it wants to turn up. I haven't put a signal on this yet. MACD did turn though. You can see where the histogram is. And the number of stocks on the Nasdaq trading above their 50-period moving average is at 59.87%, with a trough forming in the ADX as well. So it's very possible that we could see a move up to this upper trend line before a move back down. If we look at the weekly on the comp, we can see that we had 2 weeks up, 2 weeks down, and now we had 1 week up on the comp. So is it possible we could see another week up to that upper trend line? Yes. I am looking for a move lower, but that does not mean that's what's going to happen. This is a chart of the DBV, Deutsche Bank Currency Harvest Fund, which is basically the carry trade, or the difference between low interest rate countries' currencies and high interest rate countries' currencies. So we can see that the US dollar, the Australian dollar, the yen, and the pound, what each are doing. Yen's moving lower, dollar is moving higher, and the pound is moving higher as well. So the carry trade, what you want to see is a move higher, bullish for equities, and a move lower if you're bearish equities. Let's watch the 10-year yield for interest-sensitive stocks. The ones that benefit obviously are banks. If this bounces, continues to move higher. The reason why they obviously benefit is they borrow at lower interest rates and lend out at higher interest rates using the yield curve as their precedent. This is a chart of the ARC Institutional Index. This has the top 75 stocks that institutions own. It's based on a capitalization weighted index of 75 stocks, most widely held as equity investments among institutional equity portfolios. So you know that this index is designed to reflect the performance of core stock holdings of institutions. So you want to watch the buying and selling. Note the highly overbought level on the slow stow. We're up above this trend line, and if we connect these highs, we can see that we're inside of this wedge that is a bearish wedge because they typically break to the downside. You see MACD Histo, and ADX, and TSI is pointing back up. So I'm waiting for these to give me a sell signal to get out of VINIX. Looking at the 9 spider sectors, we can see that all of them have MACD crosses with the exception of XLU and appear to be headed for higher prices. So keep this in mind when you're trading going into the week for those sectors. The ones that have performed the best probably have a tendency to do a little bit of pullback, show a little bit of pullback in the next few days versus a continuation. My style is I wouldn't chase this obviously, so I'm waiting for a pullback like we saw here in the end of October that gave us a nice bounce on all of these sectors going into November. So presently I don't see an edge, which is directly playing into my thought process. If you don't have an edge here for a continuation trade, then smart money has likely been looking at this as well as becoming overbought and looking for a pullback before a resumption higher into year end. This is a candle glance of the top 25 momentum stocks, the movers and shakers as I call them. I added the 3D printing stocks, VJet, X1, Triple D. I'll be looking at a few names, namely AMBA, which is showing a nice double top pattern, possibly breaking out here with on balance volume continuing to move higher and the strength relative to the S&P 500 trending higher as well. RSI needs to continue to move, but it's a possibility this could be a scalp or a short swing on Monday, Tuesday. BLOX is also another one that had a nice consolidation along the 20 period moving average. This is the 10 and the 30 here, but this is a nice box trade. If you had gotten in on Friday, I'm looking for a continuation up to these recent highs. And you note the increased volume here. Not quite a pocket pivot, but pretty close. Pocket pivot is an up day that exceeds the previous 10 down days volume. So you would have liked to see this up over 1 million to cancel out all of these previous 10 days red volume to be a pocket pivot. Pocket pivots tend to move higher on higher volume typically. CMG, Chipotle, not interested in trading it per se, but it just shows you that we flagged at the 20, and this is the 10 period EMA. This is what a box set up for me. 10 period, 30 period, it's rising. We have nice volume here. On balance volumes continue to move higher. RSI is above 70, and we're above all Kirby levels up here. So it's conceivable that this could continue to drift higher. Not something I want to trade, but it's nice to see the consolidation along the 10 period EMA, and on the daily candle glance you can see that that was along the 20 period there. Looking at some of these 3D printers, this could be a doji that forms an island reversal. We'll have to watch that. VIPS is flagging out here, looking pretty decent. Yelp made it back through the 20 period and the 50 period. SFUN looks like it might flag out here. There's a lot of good news on some of the solars if you've been paying attention to those. GoGo had a doji, a long-legged doji on Friday. Be watching to see what happens here. The volume didn't exceed what we saw on Thursday, Friday of the week. So we had some pretty decent volume for the whole week, and then we saw some profit taking here, is what it appears to me. So keep an eye on GoGo. Qihu, I'm also watching. I saw Trader Stewie's been watching this one as well. I'm watching this base pattern here that we have up these highs and these lows. The rule is you trade what's called a base and break, basing up here, highs and lows. You trade the direction of the momentum breakout. So this continues to move higher. You could scalp this in expecting to see this recent high, or if it breaks down, you'd be looking for these recent lows to break down and trade to the downside on Qihu. Looks like we got a Kirby shelf right here that prices could find as support if we see a little move higher. So I'll be watching Qihu on Monday. I'll also be keeping an eye on what Trader Stewie is doing. Triple D, I'm almost watching this and thinking that this could pull back from a standpoint of a short. Perhaps you can do a put spread or something like that. But with all this volume, it's kind of tricky to do that. If the market turns lower, I'll be watching some of these stocks that have ran up without any hesitation out of this base and break, and look for a pullback to at least the 10 period EMA or down into a box setup, going into an S&P 500 pullback and a rally into year end. Now, if we look at Disney, just while I'm thinking about it, we can see that we had a base and break here and a little sloppy, came back down into the base and then rallied higher. Disney could continue higher into year end. So I'll be watching this one as well. The following are a few stocks that my buddy Mikey put out there. Notice this big cup and handle inside a double pattern. Nice little flag here. Looking for these highs towards year end. Possibly a scalp short swing up to this 112 level on Geospace Technologies. This is high on the list on IBD. EEFT, Euronet Services, we can see a nice little pullback to the 30 period moving average. It looks like it wants to break out on Monday, Tuesday. This is another one from Mikey. Nice trade. Note the nice volume that took out all of these red days up until this one. So a number of pocket pivots here on EEFT. Note the strength on balance volume. This is definitely under accumulation by some funds. And RSIs continue to move higher. Watch this to continue higher if you're going to take this trade. EDU, another one by Mikey. Note this recent high. This could break higher. RSIs continuing higher. Same things. On balance volume continuing to move higher. Slow stochastics is in the overbought range. This could be a short scalp on a breakout candidate or short swing, whichever you choose. I believe Muddy Waters was talking trash about this one last week. Nice pullback to 30 period moving average and then a move higher. Three white soldiers there. LOPE, another Mikey stock. Note where we're flagging here, right in a nice box trade setup. Note the volume here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we do have a pocket pivot here. This red day that we had here, we exceeded, so almost cancel each other out. But this volume here speaks a lot on this pullback, a high pullback, a little selling here, and an entry level for a continuation move higher. On balance volume continues to move higher. My stop would be a loss of this gap area here, which would be down below, almost down below the 30 period, but you could get caught by the 30 period if it moves down there, so keep that in mind for a bounce. SKX Skechers, we looked at this one last year, not last year, as it was continuing to move higher, we had this move down, double bottom, and we found buyers. We moved back above, had this nice wedge pattern. We had a move back above the 30 period with the 10 period EMA. Nice little flag here. We could see a couple more days for a move, continuation move higher. Note the accumulation and the relative strength of the S&P 500. Also, WebMD, I believe Mikey said, was under accumulation. It's featured in IBD. Oh yeah, that looks nice. Really decent pocket pivots here. A break above these highs. I'd be looking for a move back down to the 10 period to get into this, but this could form a pennant and give you an entry there. Krispy Kreme continues to ride the 10 period moving average higher after this little cup and handle break, which we traded, and you can see on balance volume is a little sloppy, but watch the volume here for a pocket pivot for an indication that we could continue to move higher. Bloomin' Brands, BLMN, another Mikey stock. Note a little bit of sloppy pattern, but for the most part, you've got a descending wedge pattern that breaks higher. I believe this is one of Trader Stewie's favorite patterns, the descending wedge and a breakout. Now we're riding the 10 period EMA higher. Note the Kirby band here that's going to offer support. If we continue to move higher, on balance volume is definitely under accumulation. ADX is really powerful. If you get into this for a scalp or short swing, or a scalp and you want to short swing this, keep an eye on a peak here as an indicator that the trend might be losing steam. We've got recent highs to deal with, but we could blast right through that. This looks pretty good. Thanks, Mikey. Hat tip to you. Alright, so that's going to do it for me, traders. It's Cousin Vinny coming to you from theclosingprint.com. Come over and check out Goat's 2-week trial, which is $19.99. I do enjoy the chat and all the professional traders that are in the room.